I was looking for income investments that bounced back from the April tariff chaos, and this one didn't just recover, it took off. Most tech funds that produce income are based on the Nasdaq 100. TDVI takes a different approach and yields more than 7% paid monthly. My portfolio is yielding just over 11%, so why bother with something that's only 7.2%? Income investments that pay less than 8% are still interesting if they bring something else to the table. That could be diversification. For example, UTG is only paying 6.7%, but it offers exposure to utilities, and it also has a particularly long distribution history with no cuts. Or IDVO, which is only yielding 5.5%, but offers exposure to non-US stocks and has been pulling ahead of the S&P 500 recently. That's unusual for an income fund. I also have some funds that yield more than 12%, so they blend together to deliver the desired income. So what does TDVI offer beyond its 7.2% yield? Well, exposure to some of the best tech stocks outside the Magnificent Seven. We all have exposure to the Mag 7 via the S&P 500 and the Nasdaq 100, but I don't want to be overly dependent on it. After following TDVI for more than a year, I waited for two things to happen before I took it seriously. Number one, I wanted to see if it would recover from a market correction. Check. And number two, I've been waiting for some coverage from Seeking Alpha, and that happened on June 30th. Check. I'll ignore the oversized first distribution because it was probably slightly less than 2 months worth of income squeezed into one payout. The first month of a new fund is often an odd amount. The second distribution was 13 cents, and it has generally grown from there. As I record this, the most recent distribution of 17.34 cents is the highest yet. At roughly 2 years of age as I record this, that's an excellent start. Snowball is handy for distribution charts like this, but I mostly use it to combine my stocks from 3 brokerages into one dashboard. I can rank by yield to see how I want to rebalance my portfolio, and the calendar function lets me see how many dollars will arrive on any given day of the month. Link in the description for a free trial and a discount. By the way, if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%, and even though this one is slightly less than 8% as I record this, it was yielding more than 8% until recently. If you'd like a copy of my portfolio, it's available via Armchair Insider. Link in the description. It's free. The FTVest Technology Dividend Target Income ETF, ticker TDVI, is a covered call income fund that focuses on tech stocks that pay dividends. Most of the tech stocks that dominate the news, like Netflix, don't pay dividends. They're still in their growth phase, so they reinvest every penny back into their business rather than paying shareholders. However, there are plenty of mature tech companies that do pay dividends. Remember IBM? They've been around for more than 100 years, and more importantly, they pay a dividend. IBM is TDVI's 4th largest holding. The strategy is to select tech companies that pay a dividend, then boost the income by selling call options on the Nasdaq 100 or the S&P 500. It's actively managed, so performance is driven by FT's ability to select stocks and manage those option trades. The challenge for covered call funds like this one is that upside is capped. When they sell those call options, they're selling the rights to some of the upside if the market takes off. A fund like QYLD has a much higher yield than TDVI, over 13%, because they sell the maximum number of call options, the equivalent of 100% of the portfolio. By contrast, TDVI is selling far fewer call options. As of the end of Q1 2025, the fact sheet shows they sold calls on just 11% of the portfolio. The other 89% was free to appreciate, and it did appreciate considerably. The expense ratio is 0.75%, which is above average for an actively managed ETF, but so far they have the performance to justify it. Since inception, the fund has delivered a higher return than the S&P 500 and the more relevant benchmark, the Nasdaq 100. That's impressive for an income fund that's paying a 7.2% yield. And of course, the yield is the amount you receive after expenses have been taken out. Tax treatment is confusing. There are 19 A1 notices showing return of capital, but those are just estimates. And when I checked the 2023 and 2024 end-of-year tax reporting, there was no return of capital. The tax reporting spreadsheet is on the FT website, but you have to do quite a bit of digging. The relevant section for the 2024 statement begins on row 1224. I trimmed it down to make it easier to read, and of the $1.90 distributed for the year, all of it was classified as ordinary income, and box number 3, non-dividend distributions, which is where return of capital would appear, was 0. So until I see an official statement to the contrary, I'll assume ordinary income. I didn't find any additional pros and cons beyond what we've already covered, so I'll just do a quick summary. The pros are dividend growth, price appreciation, which is an unusual one for covered call funds, and diversification beyond the Nasdaq 100. We can get a nice snapshot of the differences using ETF Research Center. TDVI and the Nasdaq 100 overlap by 26%. TDVI is heavier in these stocks, and the Nasdaq 100 is heavier in these stocks. The negatives are ordinary income, as I said a moment ago, not particularly tax efficient, and the age of the fund. It's just under 2 years old as I record this, so not much history to go on. Let's see total return versus some other funds that focus on tech and income and have been around at least as long as TDVI. We can only go as far back as August 2023 because that's when TDVI was launched. ADX was so close, I'll call that one a tie. I'll link my recent review of ADX in the description. If we look at the top 10 holdings for TDVI and ADX, they only have 2 stocks in common, Microsoft and Broadcom. So I like the idea of holding both for diversification within the tech sector. JEPQ came in third, followed by BST and then STK. We don't have time to go into the pros and cons of each of these, but I like them all. If you'd like a more detailed comparison to JEPQ, this analysis by Cain covers TDVI in more detail than I can go into in this video. He also compares it to SCHG from Schwab. I'll link to Cain's article, which I read on Seeking Alpha, in the description. I'll also include a link for a discount on Seeking Alpha membership and a free trial. I use the premium level for researching pretty much everything. TDVI's performance is fantastic, but buying what went up recently isn't always a great idea. There's an argument to be made that it's overpriced or that the market in general is just expensive as I record this, but maybe not by the time you're watching it. The target yield for TDVI is 8% plus the Nasdaq 100 yield, which is currently 0.5%, so 8.5%. As we saw earlier, the fund spent a good chunk of the year to date yielding more than 8%. Given that it's currently below that target, I'll assume it's expensive until it starts yielding at least 8% again. BST is yielding less than it was for most of the past year. Tech is generally expensive right now, while TDVI is an ETF and therefore trades at the value of its assets. BST is a closed-end fund. That means it can trade above or below its net asset value. Currently, BST is trading roughly 5% below its NAV. So on a relative basis, I'd say BST is more appealing from a pricing point of view as I record this. Given the pricing, I'm not in a rush to load up a full allocation to TDVI, but if it continues to perform as it has been over the past 2 years, I do plan to buy it. At some point in the next few months, maybe sooner, I'll buy a starter position and then add to it on dips. The point of this video was to share that TDVI has demonstrated an ability to deliver both income and appreciation. Even though I don't buy individual tech stocks, I am a fan of some of these old school tech stocks that TDVI favors. Companies like Oracle, Taiwan Semiconductor, and Lam Research don't get as much coverage in the media as Nvidia, Apple, and Facebook. Even though they're older than the Mag 7, they continue to perform like rock stars. If TDVI can continue to grow its value, then gradually over time, the 7 or 8% will be 7 or 8% of a larger number. Before I go, I mostly make videos about investments I like, but I like some more than others. If you want to find videos of my favorites, click here for reviews focused on my top 10 holdings. That wraps it up for this look at TDVI. More Armchair income coming soon.
Armchair income, that's my hustle and my groove.